Welcome to Learn CFDs, and today we're going to take a look at some seasonal patterns in the Australian market. Now we've seen, if you've watched the video on hit rate and risk reward, you'll see that the profitable opportunities can be identified in the Australian market. Here we have a hit rate of 78%, risk reward of 1.85. Down here, hit rate 70%, risk reward 1.92. And this last one's very strong, hit rate of 85%, risk reward of 5.16. And what that means is, for a $10,000 investment, you return $42,300 profit if you follow this last setup on average. So what are the setups? Well, they're simply periods of time through the year where the market is strong or weak. The first one is mid-March through to mid-May. This one here is the end of June through the beginning of September. Here is the 19th of December through to the 31st of December. And these are all trading on the long side, so the market goes up during these times. Now if we have a look at the chart, the average return of the market, you can see that January, February is normally pretty flat. But through March, April, the market's quite strong up into early May, and then gets weaker through May, bounces back up, and weak through June. From the bottom there in June, the market gets stronger through July, a few pullbacks on the way, but tops out in late August, early September. We then see the market lower through September before bouncing up, and then lower through October. Then pretty flat through November, rallying strongly in December each year. And this is the average performance. Looking at the Australian market in 26 years of data, this is what we come up with. Now obviously the implications from a trading perspective, there are times when it's easier to trade. If you're buying shares and expecting them to go up, well, they're more likely to go up through March and April, July, August, and through into December. And avoiding periods of time from, say, August through to October, where the markets are typically weaker, or through January, February, which once again the markets are quite weak. So if we look into the detail behind it, here we can see the average returns for the different periods of time. And on average, the market's up 4.7% in the March to May period, over a 2-month period, with a winning percentage of 78% and a risk reward 1.85. Your weakness is shown here in red. 33% of the time it's profitable on the long side, so therefore it's profitable on the short side 67% of the time. And on average we lose money 1.2% during this time. Here in June through to September, once again very strong returns with a 70% success rate, and 67% through here in September through to the end of September, early to late September. Coming down late September, 23rd of the 9th to the 3rd of the 10th, we've got a 63% chance the market moving higher during this time. And then the drops through October, 48% chance of the market dropping away. And then we come back to the rally down the bottom, 81% chance the market will be higher, and risk reward 1.2 during that time. So you can see the stats here, and by identifying opportunities you can position yourself on the right side of the market to profit from it. Find a powerful setup, and that powerful setup can be used to improve your trading results.